quarter three, we definitely had the geopolitical tensions weighing on the markets. We had the trade war. The trade war actually intensifying over the third quarter. We had protests in Hong Kong, which questioned the status between Hong Kong as a financial hub. We did have Brexit still ongoing, with more likelihood that it will be a no-deal Brexit. And lastly, we have tensions within the Middle East again, where we had this attack on the Saudi Arabia oil infrastructure. When you look at the manufacturing side, particularly Germany, right, which is very, very dependent on exports, the PMIs were deteriorating quarter by quarter by quarter. And the engine of Europe, which Germany is actually stuttering. So on the other hand, we have the consumer. The consumer did fairly well, particularly in the US, but also everywhere else in the developed and emerging markets, slightly deteriorating, but still expanding. Within the portfolio, we have not made major changes, actually, in terms of regional allocation or sector allocation. We had overall 9 out of 11 sectors outperforming for us, which did fairly well. ASML had a very good quarter, and some of the cyclical upswing which we had in the semiconductor, which was suffering, helped the ASML story. And Rentokil was just delivering another quarter of good results and people believing that they could achieve this very, very strong cash flow generation. In terms of buys and sells, we had in buys Airbus, which is an airframe manufacturer located in France, which has very, very strong cash flow generation over the years to come with a very, very strong order book. We had a company which is called Thomson Reuters. It's an undermanaged business which went through a certain restructuring and is concentrating on their core businesses, which is legal and tax. And thirdly, we had Constellation Software, which has an incredible track record in acquiring smaller software companies and integrating them into their software verticals. On sells, we had Canadian Pacific, which reached our price target, as well as Hong Kong Stock Exchange. Quarter four will probably have also relatively weak economic numbers, but there is some silver lining on the horizon, which is called money supply. Money supply is actually increasing. It's coming from the Fed, which just started. Then it comes from the ECB, where open QE is starting again with Mario Draghi. And then finally, we have it already existing in China, but continuing as well as in Japan. So money supply, increasing money supply, normally has a kind of positive impact on economic numbers with a lag of almost 12 months. Stock exchange normally will take that a little bit earlier, of course. International markets are more driven by the PMIs because they are more export oriented. So what happens here is that international markets currently are very underpositioned in investor portfolios. Secondly, the valuations look very favorable for international markets, coming at a big discount to the US. And lastly, of course, what could happen to the US dollar? Will international currency appreciate versus the US dollar? But in order to get that reversed, what we would need are certain triggers. One would be the trade war. Secondly, it could be fiscal stimulus, and fiscal stimulus has happened already in some of the emerging markets in China and India with a corporate tax cut of 10% just recently. But Europe should chime in there with fiscal stimulus as well.